It's Monday the 2nd, I'm FX Plu and this is CurrencyTransfer.com's market update. So to kick off the week, the headlines are that Germany's coalition has been rocked as Seehofer offers his resignation over immigration. Hard Brexit fears hit the growth in the UK and the dollar awaits fresh impetus on Friday. So Thursday evening, you'll remember that Merkel pulled an all-nighter getting an agreement over immigration. Back home though, Seehofer didn't welcome her back with open arms. He felt the agreement didn't go far enough, and apparently there were harsh words and a heated exchange between the two of them, culminating in Seehofer tendering or offering at least his resignation. This is a bit of a blow for Merkel, as political pressure that she thought had been alleviated with the agreement will build once again back home. Euro dollars fell from the high seen on Friday of 116.90 following the agreement. We're back down to about 116.50 now, and the euro is likely to remain under pressure as the German political risk continues. In the UK, the government continues to dither on its proposals for the future relationship with the EU, and whilst it becomes a moot point over whether Brexit is the right thing or the wrong thing to do economically, the current focus is now on how the negotiations are handled, and indeed that's not going terribly well. On Friday, UK growth data confirmed a continuing economic slowdown domestically. We saw only 0.2% growth announced in that data, and cable did rally to 131.75, but perhaps on the relief that the data wasn't as bad as it could have been. Sterling euro is pretty much unchanged throughout the day on Friday. And the US dollar has entered a period of reactivity ahead of a big day on Friday, where we've got non-farm payrolls, of course, the highlight of the month for the sweepstake in the office, and also the announcement from the White House. That's expected to be focused more on protecting the US business technology from theft, rather than reducing the trade deficit now. Since the US rate hike a couple of weeks ago, economic data has been largely supportive of the Fed's path for 2 further rate hikes in 2018. Personal consumption data was out on Friday, and year-on-year growth there rose to 2.3%, beating forecast of 2.2%. But the real acid test, in the short term at least, is going to be seen on Friday, not the non-farm payrolls headline. That's becoming a little bit like a lottery, and indeed my performance in the lottery is similar to that in the office sweepstake, sadly. However, wage increase, an important element of that, is a significant indicator of future price growth, so that's the one that the market is keeping a keen eye on. The dollar index still seems capped at that 95.25 level, but there does seem to be growing support around the 94.50 level. So Charlie on the charts expects the trade to continue around within that threshold, certainly until the end of the week, where we may see impetus to break out. If you've got any questions, pop them in the comments below. Otherwise, I'll be back again tomorrow.